Hey, good morning out there. 8:48. Part of this is that you get to hear the dogs bark every once in a while when somebody walks by with their dogs. That's a stone cold killer downstairs barking at somebody. Either that or it's a bird that's landed in the yard that is in danger right now. I hope everybody's doing good. What a market we're getting ready to see here. This is absolutely two things you're going to learn today. First of all, you're going to learn who's been doing all the work. And I've been talking about this, reading about this, doing all, but if you look at the four companies that came out last night, look at the NASDAQ 100 right now, up 2%. Cubes are trading up 2%, right? The stone cold killer is in the house. Cubes are trading up 2% and the Dow flat. Even though Caterpillar beat, you've got some good numbers that are going into the Dow. Now, there's a lot of crosswinds. Obviously, the $600 unemployment bonus is going to go away today unless they do something. But this is exactly what has been driving this market for the last 3 months. Four stocks, 25-30% of one index, driving everything. And that's not to say there aren't any others that are out there working, but I think today is a perfect exercise and example in what has been driving this market higher. So, you know what? We're going to keep it simple today. I am all for keeping it simple on Friday. Remember when we used to do Free Flow Friday and I'd take all kinds of questions? And I'm going to start by throwing up a poll. After those numbers, boom, I want to know which one you'd be buying. Which one of those big four would you buy today? You can only choose one: Apple, Amazon, Google, or Facebook. I'm just curious because the analysts are weighing in with their activities. We're seeing a lot of analyst activity on a couple of these names, and a couple of them are getting a little bit left behind in terms of the names. So let's go to the slides while you're doing that. Take a little bit of time and fill that out. Also, the Q&A, since I'm going to do Free Flow Friday, let's start to pack the Q&A up with some questions. I want some good ones here. I want some good ones about the market. You know, you can ask me about a few stocks and sectors. I prefer sectors, and then I can nail it down to stocks for you because that lets me give you my opinion, not give you individual advice here. But futures trade ahead of this ahead of the morning trade. We'll talk about the big four. Wow. I mean, I've got a number of companies and positions that are outside of those big four, but at the same time, wow. What happened last night? Just absolutely crazy. Big numbers. Everybody came in. Apple coming out announcing the 4-to-1 split puts it back in. Even though you can buy partial shares of Apple, it goes back to old school investing where you want to keep your price of your stock at somewhat of a psychologically reasonable rate. It doesn't create capital. People ask if it does anything for the value of the company. No, it just makes it more attractive because people have a psychological thing against buying a stock that's up in the thousands or even the hundreds right now. I'm going to give you 3 under the fold earnings report results and trades. So in other words, we're going to look at some stocks that aren't part of that big four. One of them you're going to notice, it's one that I've been talking about for a while. I'll just spill it. It's Pinterest. It's the non-social social media. It's the one that flies under the radar. They're up 27, actually 33% ahead of the market on their beat. We're going to look at that, how you trade it. And then I'm going to get into your Free Flow Friday questions. And that's really hard to say 3 or 4 times in a row. So this morning's news, obviously, futures trading higher on last night's news. NASDAQ 100 shares 2% higher in the pre-market. Composites only trading 1.2%. That 35% that makes up those 4 companies, Apple, Google, Amazon, and why do I always slip on Facebook? I don't know. Maybe it's a mental thing. I don't like the Facebook. I don't like to do the Facebook. But anyhow, with those 4, it's 35%. That 0.8 of a difference tells you how much of a pull those companies have on the NASDAQ 100. Dow futures are higher on CAT and the Merck reports that were good. Caterpillar is getting busier. Europe showing better signs or green shoots here. They're talking about Europe business and a capital expenditure. And obviously, you've got to play on mining here as gold and silver mines and other of these mines start to gear up again. You're going to see it. And then earnings on the energy side disappoint, unfortunately. So last night's tech results impressed on all levels. Taking a drink here, guys. Oh, Google was the laggard here. Questions about the sustainability of their ad revenue, which is exactly what drove this quarter's strong results. Remember back to Wednesday when they were testifying in front of the House Judiciary Committee? One of the things that Zuckerberg pointed out that they only get 10 cents on the dollar of advertising. It's not 90 cents it goes to Google, but it's a lot. That's what drove their revenue. That's what drove their beat. And they actually said they have to work on their sustainability of that. That's why the stock right now is trading flat, about flat right now against the market. Let's take a look at the pre-market activity on it. Right now, it is trading. Alphabet is taking a second down 67 basis points, down 67 basis points. So if you look at this, absolutely big, well, the guy who is making the comment about the cubes, nailed it, buddy. You nailed it. Apple shocked with iPhone sales. Apple's iPhone sales came in at 26.4 versus 22, showing that even when they're shutting down stores, even when there's a pandemic going on, demand for their hardware, their wearables, everything remained high. Also, when you look at it, their stores doing well, their service, their subscription, if you will, side of the business is growing, and that's great. Amazon blew the revenue out, maintained. There's your typo of the day, by the way. The Knight from Nico I saw is on here, should have pointed that out already, and maintain their margins. AWS did soften. That's something I pointed out yesterday. AWS, which is our cloud services, they do everything from providing SQL. I've actually got one of my SQL databases backed up on AWS's service. To webs, you can do all kinds of web analysis stuff. It's Google Lite, if you will. But they saw a little bit of a drop in margin there. That was their strong suit, even though it's a small percent of the company. I think about 11-12% of the company. Strong game they had a couple years ago, and they're starting to lose share there. Microsoft is picking it up here with their product. Company is seeing third-party sales growing faster than store sales, and that is exactly one of the things that we pointed out during that congressional hearing, is that Amazon is actually starting to get their third-party sales are growing faster than theirs. And Facebook, finally, I'm trying to give you a bullet on each of the four, saw engagement numbers and ad numbers grow. Shocker. We're all sitting at home looking at our TV screens or looking at our computers. Shocker. But they also announced that they're doing some capital expenditure at the higher end of the range, because their fight right now is to keep engagement. Now, their July engagement that they were able to take before the earnings read remains strong. So even while we're all out there getting, out and about a little more, people are still checking on the Facebook. I got to give you some full disclosure. I talk about how I don't like the Facebook. There's a great group on there for my camper group that every hack, every advice thing I get, so I am on it, but it's for a very limited thing. Let's look at the charts here. Amazon is the one that is going to wow here. This is the one that is seeing the most analyst activity right now. When you look about at what the analysts are saying, and Telsey Advisory Group, who I mentioned last week, who is a retail research group up in New York City, and she does an amazing job. All she does is retail. Amazing job of nailing down the retail. Last week, they took their guidance on the stock up to 3,500. This morning, tag increases to 4,000. And that's where this stock is going, folks. Amazon's heading to $4,000. It's going to happen before next quarter, I truly believe. They've got a strong game. It's getting stronger. You see the little bit of pullback here. Remember yesterday we talked about a sell the rumor here, and we saw a little bit of that with Amazon. The 20-day was in play. The stock right now, obviously, blowing by that 20-day, leaving it in the dust. It's up 172 points or 5% of the pre-market, and it's come down a little bit here right now. So, and you're right. Look at the Brazilian version of Amazon, Mercado Libre. I love saying that, MELI. We'll look at the chart a little bit later because that's one of our favorites here, but same type of market. So Look at Amazon here. If I have to pick one of the four, and I've asked you to put up, and I'm looking at the poll right now to see if you guys have been clicking on it, and Amazon looks like it's getting so few votes. Apple's getting the most votes, 12. Come on, guys, give me some more votes here. Anyhow, 48% on Apple. You know what? I'm putting Amazon up in my number one category, and that's why it's the first one we hit today. If you look at it, Facebook beat by 42 cents, beats on revenue, expects their everything to be flat in terms of their engagement numbers, or slightly down. And what they're saying is the pandemic's going to take people away from Facebook a little bit. We're going to be so excited to get out and do things and go and see restaurants that we haven't seen for a while. But at the same time, I'm going to tell you, Facebook's trading up 7% right now, trading up to 250. It's going to take out those highs. Probably today, I think we'll see a little bit of a pullback, but Facebook's on its way to make another 50-point jump here. I think the stock is going to answer. And one of the things I pointed out yesterday, and I was kind of happy, they didn't really address the political environment with this report. They kept it business. They went right down the middle and said, here's how our business is doing, here's where we're putting money, and here's where we think we're going. And I think they did a successful thing in doing that by not getting out into the weeds with the political questions that are being raised. And honestly, I think Wednesday probably was a little more grandstanding than it was anything. Not a lot of meat on that. They just tested their 50-day moving average. Look for the stock to take off, go above that 250, and then beyond. But I'm still picking Amazon as that one is going to lead this for. Alphabet, right now trading flat. Not much exciting news. And look at my headline here, beats by 190, beats on revenue. You know, when I pulled up the headline, that's what I got. And I kind of did that's strange. I think we'd hear more about Google. The thing that you're going to hear about Google and Alphabet, rather, is what they're going to have coming next. What are they working on next? And for the longest time, it was autonomous cars. We were going to, we had the glass and all these things that I can sit back and remember, when they split the company up and said, this is going to be our moonshot side, this is going to be our business side. Google really hasn't, in my opinion, started to perform than that. Apple, look at them with their wearables. If you saw earlier this week, they're coming out with a glass version of their computer, of the iPad. So they're innovation here. The ad revenue can't do it all, and ad revenue certainly did it all for the company on this one. The company's going to trade flat right now. If you look at it, it's down to 0.8%. It's going to be the laggard in the group. They didn't prove what they're doing moving forward. I'm one that has said this quarter is all about confirmation. If you think about it, the rally that we saw from 1,100 to 1,500, 1,575 on Google was speculation. I say one of my commandments of trading is that markets are driven higher by speculation, not fundamentals. The catch to that immediately is that fundamentals at some point have to confirm the speculation. Otherwise, your speculators start to leave you in a vacuum. I don't think Google's going to get left in a vacuum by any measure because of the ad revenue. But at the same time, that's not a growth business for them. Other people are getting into it. Google's going to be your laggard. And then Apple, 51 cents they beat. Come on. Tim Cook, you have to say that Tim Cook is doing a fantastic job here, especially managing the company through the pandemic here. I am a fan of Apple products. I've been a fan of the stock. It's one of those that tends to be overbought, and it also it tends to be bloated with investors. But at the same time, it has turned into a Procter & Gamble of the technology sector. So it is the blue chip of the new blue chips. And what I mean by that is they've got a great combination of products and they've got a great combination of services. And if you can get that nailed down, you've got a stock that is going to go with a low volatility rally, and it's going to continue to go. Apple, I'd have to say, comes in at my number 2 here right now, right behind Amazon. I expect some big things from them, and they continue to innovate. Interesting story, back in the early 2000s, when I was going to New York quite a bit, a couple times a week, I would actually talk about, and this was, remember when Google came out with their IPO and they did their Dutch auction, and you had Apple and Microsoft were battling out at that time. Microsoft was one of the most loved stocks on Wall Street. 95% of the analysts loved the stock. They had to have it as a buy recommendation. Apple, on the other hand, was down in the 20% range. And I got asked a question at one point when I was on television, which one of these do you like between the two? I said, you know what? I like Apple more than I like Microsoft. And the one reason that I gave them was because Microsoft, everybody's in. Nobody's into Apple. And this is just when the company was starting to innovate and turn around. There was no iPhone. It was an iPod. And that was new. And people said, can you build a business on this? And it was innovation. Innovation. And that's what the companies continue to do. Now they're in that situation where 94% of the analysts buy the stock or have it as a buy recommendation, but there's a good reason. It has turned into not only a growth, but a growth in income company. And it's a spectacular one. Gotta love Apple as the number 2 there. Let's go back to the slide. I had to give you a little look at me. We got a little max headroom there as well. And Apple 5, yep. Their own Wi-Fi. Also, Amazon investing in satellites for their own Wi-Fi. We're going to see Wi-Fi everywhere. It's going to be amazing. Go camping right now, you're going to be able to see Wi-Fi. Takeaways, Amazon seeing the most analyst activity this morning. It's going to be the big buzz. It's not about the ads with Google, which the company is having to work hard to hold on to. Least amount of analyst activity on Google right now is that second bullet point. Apple reaffirmed the product outlook, the demand question, continued pipeline, the subscription model remains strong. Number 2 stock on my list. Outlook from Facebook provided steady engagement despite the reopening and reinvestment. Reiteration is high. You haven't seen upgrades to Facebook today, but you're seeing lots of reiterations. 13 was my count. Under the fold results, let's jump into them real quickly. Pinterest comes out, beats by 6 cents, beats on revenue, sees third quarter revenue above their consensus. They gave us exactly, you know what, Gary, I can't get away from the camping world. I gotta have my Wi-Fi when I go camping. Anyhow, when you look at Pinterest, this is the unsocial social stock. It's pictures. But I go to it. I go to it more than I go to Facebook. It doesn't have a political slant to it. They got into the advertising side of it as well. Wayfair is making a lot of money off of their advertising with Pinterest. People are doing things with their home. That's why they're going to Pinterest to get ideas. The company comes out with a great report. This has been one of those stocks that I've loved, along with, if you look at it, you have to throw Twitter down to the side right now. Etsy is the other one, and you guys know I talk about the $3,000 canoe. My canoe's only about 20% done right now, by the way, but Pinterest is going to take out that 28 level, move to new high since their IPO. This stock is going to be heading towards a price of 45, I believe. I'm looking right now at the November 40 calls. You can't get a price on these right now because the market's not open, but when it does, you look at those November 40 calls, and that is as far out as you can go in November right now. They're going to open up new strikes today, I guarantee you. Questioning possibly the 35, but when we're going to open around $35 on the price of the stock, you know, I want to get a little bit out of the money with Pinterest right now. Let me pull up the updated quote on where it is. It's up at 34.20 in the pre-market. That's why you're looking at the 40 calls. And those Novembers give you time to play out past the next earnings, which I think is going to be a good earnings report again. This, and especially if we have to start staying in place again, Pinterest is going to get a bump. On the other side of things, I've mentioned that you have the haves and the have-nots in the biotech sector. Gilead was a have when we were talking about remdesivir. No, they were a have. And all of a sudden, the spotlight's been taken off, and you've got Moderna, you've got AstraZeneca, you've got a couple of others, and biotech companies that are down at $2 and $3. And it just, Gilead has lost it. It's moved into a range. They missed by 34 cents. They missed on revenue. They still raised their EPS for fiscal year 20, but their sales guidance was a little bit less than what everybody was expecting. The stock was already into a bear mode. I am right now talking a lot about, I don't like these, and I'm not going to call them zombie stocks, but there is a death of a zero volatility stock that is going on right now. And you look at the financials, and that's one area. This has gone to not a zero volatility. This has been very volatile, but This miss is going to take us below that 20-day moving average. The stock is already trading right now in a bear market as it's below its 20-month moving average as well. Gilead, I think you have to look very seriously at if you have it in your portfolio as a stock that you can do much better with than AstraZeneca, or something that is a little more cutting. Johnson & Johnson right now would be a good replacement for Gilead even. Johnson & Johnson having some news this morning on their progress with a vaccine. 72 is obviously the bottom that we've seen, and we're going to crack through that today. I don't like the outlook for Gilead. I'd actually be looking at something along the 70 puts and playing it out to October. So that's only if you want to get a little bit, it's not even aggressive about it. It's going to open at 67.90. Give it a little bit of time to play out. But again, this is a stock that's turned into a laggard in the group. It's not oversold yet. You can see from the reading here. This 72 is going to be a big move. I've got a target of 67.50 on the stock, and that's from looking at the actual open interest over the next couple months and where that activity lies. So Gilead, I got to drop the tone of my voice and say, hey, this one's a have not. Sorry, guys. On the have side, though, get the voice back up again. Tandem Diabetes, TNDM. My night trader people know this stock because we've traded it 4 times, and every time we've traded it, it turns out a winner for us. I don't have a call on it right now because I didn't want to add it ahead of earnings. Missed by 20 cents. Missed. Beat on revenue, guides their revenues higher above consensus, and management had some good stories about the stock. This is one of those companies that continues to put together alliances, and that's why you're seeing a nice positive trend. It's a sawtooth stock, and you know what that means. It moves up 15, 20, 30%, and then it moves back down. That's why you got the stop limits at it. Right now, that stock is going to sawtooth much higher this morning to the tune of, let me pull up my most recent quote, 5%. 109 is where we're going to open up trading, and we're going to take out that 107.5 high. The stock's going to continue that trend higher. I think you head up to around 120 on this thing before you run into a sawtooth back down again. Tandem has always been one of these where the news drives the stock, and they have plenty of headline news that continues to be positive. I like playing the 110 call, and I've been looking at a couple of the months out. If you look at the nearest, you're looking at, obviously you can look at weeklies on this, but I like looking out to the September 18 on these right now. The September 18 is your regular monthly expiration on it, and you look around, possibly the 110 level. That's going to go in the money very quickly. I like the fact that the headline is here. You pay a little higher for it. It's usually around an 8% premium on those options just because it's more volatility. So let's move. Oh, I was going to give you a bonus. My bad. I said in my email this morning you were getting 3 Johnson Control. Johnson Control comes out. Who knows about Johnson Control? The auto industry goes flatline and goes dead. Johnson Control kind of starts to pop up, even though they had a lot of exposure to the auto industry. They're all over the industrials right now, all over, with the industrials picking up speed. Love the fact that you're getting a golden cross coming up with Johnson Control. The company has been coming back. They're also got an international holding, or an international presence, if you will. And so as we see some global growth coming, the consolidation across 37 after it broke above the 20-day, I love. When you look at JCI, this is a stock that has been emerging. I'm not going to say like a phoenix from the ashes or anything like that, but right now this move takes it out of a bear market. Right now, the 20-month is at 37.20. That's one of the reasons why this level has been much challenged. It's not because of the $37 price. It's because at 37.20, you've got your 20-month moving average. Right now, it's moving into a bull market. It's going to start attracting more and more analyst upgrades and analyst attentions. I love the beat. I love the guidance on Johnson. This is a slow burner. I think it's a stock that if you look at adding to a portfolio, you can add it at $37, $39. It's going to open up at $38.80 this morning. You can add it at $39 just with going out and buying the stock. And I don't think it's a terrible hold right now. If you look at it, it pays a dividend. I mean, it does, and it's going to grow with those industrials. If you like a stock substitute, you look out at the January options, the Jan 2021, or I'm sorry, the 15 2021s rather, and you look at the 40 and turn it into, they closed around 275 last night. For so 275, you controlled the same 100 shares you put 3,700 down on. There you go. I love Johnson Control, and this is the first time I can tell you I've said that in more than probably 10 years. I remember I had a client that worked for the company. She retired and loved the company, and as a result, I had to watch it very closely. She had a lot. She had millions in Johnson Control, and we walked her through divesting it, but like the JCI here for the long-term play. So I give you a little bit of a down. I give you a little bit of an up. I give you a little bit of through the roof with Pinterest, and then we cover the 4. Let's look at some of your questions because it's free flow Friday. If I can get my mouse over to the Q&A, and I'm checking the poll, not many more votes here. Disappointed. 52%. So Apple's the winner. Apple's the winner. 38% on Amazon. Alphabet 2. 4%. Facebook 4. I got to say, I agree. I love that you like Apple and Amazon too. Those are my number 1 and 2. I got them flip-flopped on you. Q&As. Let's take a look. Q&As were not opened. You know what? I'm just going to end the Q&A. For some reason, it wasn't open this morning. That's all right. I'll just scroll up here. And if you guys asked a question up at the top, why don't you go ahead and put it down at the bottom again for me real quickly, because I'm going to have to scroll through these, and that's going to cause a little bit of a delay. I'd rather, you know what, Dan, I'm looking right now at one question about Walmart looking to put pressure on Amazon. Obviously, let's pull up a chart so we can start looking at charts here, because I know you guys like to see the charts. Pull this up. Walmart has kind of been giving this little sideways dance, and then all of a sudden started to move a little bit higher on us after they announced what, obviously, their earnings, but they came out with, we're working with Shopify. Shopify is going to be working with us, and that is the sign, exactly as you said, B. Shopify getting on board with Walmart is huge. Procter & Gamble is on with Shopify. A lot of people getting on board with Shopify right now, but that is kind of lobbing a, let's say, a little chin music for the pitcher or for the batter at the box right now. Trying to play it on baseball here. A little bit of chin music. They're pitching high at Amazon right now. QQQ and or SPY take out new highs today, or the pop already happened. Great question, Jordan. These reports last night were so good on the cubes. They're going to take out the top, and I think we're going to continue to see a rally. You're going to continue to get people that are going to be jumping into the NASDAQ 100. I have to think from, AK, you're killing me. You're killing me. Sorry. Back to the question here. The cubes are going to lead the spiders right now, and that's because the spiders still have those financials attached to them. When you look at the financials have slipped into that zero. I still don't want to call it a zombie walk, but I mean, it's a zombie walk. The financials are right now just going sideways into a flat line, no volatility move here. And you've got other areas that are influential on the spiders, whereas you've got the NASDAQ 100 that's got these 4, and these 4 are going to fire on at least 3 of those cylinders pretty hard for the next couple of weeks. You will see some, guaranteed, guys, we have to see some sort of healthy pullback. It's like you and I taking a nap. This market needs a nap. It needs a 10% nap right now. And that would get everybody excited about, because there are a lot of money managers that are sitting on the sidelines. And there was a great article about hedge funds getting their faces ripped off with Kodak on their shorts. But there are a lot of people that are sitting and covering shorts right now has got money coming in, but still sitting on cash and waiting for that pause that refreshes. We need a 10% or a 15% nap for the markets, and even in the cubes. It would be nice if it happened in the cubes. But the problem here is that you've just got momentum, and you've got a unbridled, let's call it, market. Sentiment is getting very bubbly. Overbought can become more overbought. I hate saying that. At some point we get it though. Let's move. Jerry, go get it. Go get the moolah, man. Go get it. Was Ford's positive surprise really a strong positive for the next quarter? My answer to that is no. I expected that Ford would come out with some decent earnings. Obviously, you're getting a little bit of, right now the stock, I think we're up 2% in pre-market right now on Ford. Let me pull up the quote here on my other platform. I got two platforms going here, guys. So we'll look at Ford right now at the chart for Ford. And this is one of those stocks that I wrote about ahead of earnings last week. I think Ford still ends up moving down to a 6. You've got it trading up 2.82% at 692. You're not going to make it above that trend line that I've drawn here. And at the same time, you've got the 200-day moving average. It's coming down on the stock. Ford needed to really, really, really impress. I need to hear more about what they're doing in terms of EV and how they're going to start evolving the brand, not just the Mustang, the cool Mustang that's going to come out that's going to be, electric. And that's the Bronco that, they've got some great products that are coming out. But at the same time, you've got to start focusing on a larger picture here. And I just don't think Ford is doing it. It's a little myopic in their view. If you look at GM, they got a little bit of a bump after their earnings. And look at what happens. They start to trade down. I think that's what happened with Ford because it wasn't a killer report. It was a good report. It wasn't a killer report. The VIX, let's take a look at the VIX. And when we look at the VIX, obviously, think about it. This is going to be a weird one. When I told you about the VIX or the cubes and the NASDAQ 100, we start to look at the difference between the NASDAQ 100, obviously, and the rest of the market. So you've got you've got a VXN on the, forgive me here as I type for a second. You've got a VXN on the NASDAQ 100. That's going to plummet. You've got the cubes. It's going to pull back. It's at 2350 is where it closed. It's going to pull back a little bit this morning on the spiraling down. You still got, though, that little bit of a game here that we've been playing with this bottom right around that 2350 mark. Watch this in terms of what happens with the S&P 500. The S&P 500 being the driver of the volatility index. I've got to bring up my other platform for just a second. Spiders trading, when I look at just the spider trade, because that's a little bit better indication, in my opinion, than the futures, you're up 0.6% right now, and that's come down from about a full percent earlier. The VIX is going to be an interesting trade, especially as we head into the weekend, and you're going to get a little more of the political discussions outside of the earnings category. You're going to get some of the political discussions that are going to start to get the VIX into a little bit more of a difficult time moving lower. We are long volatility in the night trader service right now. Long volatility. So Kroger, stay. I love Kroger. We talked about Kroger and Walmart and Kroger, best in breed, doing it right. The stock has been flattening out around 35. Obviously a hometown company for me. We're seeing a little bit of a pullback here, and that's because you're seeing, obviously, some people thinking that the top has come for, and remember, Kroger's still considered a retailer. Top has come for a retail. And if you look at the XRP, which is your good example of the retail, it's been blowing up through. Now, you can have your different companies that have been going different directions. Obviously, if you look at American Eagle, actually got a nice little bump, but a lot of the back-to-school type of retailers are seeing some weakness here. They're seeing that weakness because back to school isn't really back to school. And guess who I just saw doing back to school literally on CNBC about 30 minutes ago? Back to school advertising, Dick's Sporting Goods. So back to your question, watch for Kroger to kind of bounce around this 35 level, support at the 20-day, the trader's trend line, and then start to make its move higher again. It's not going to be one that's going to light up the world up like Apple or Amazon, but at the same time, it's going to be a good, solid stock. If we go back into stay at home or they start closing businesses, Kroger's handled it very well. It also pays you more than a 2% dividend. So you're going to get some investors that are looking for, sorry, I was trying to type something in there as I was going to it, that are going to be looking for dividend yields as we see the 10-year and other interest rates continue to plummet. There's your miners right now. If you look at the metal and mining ETF right now, we're seeing a bit of a pullback. If you look at gold, GLD, we've seen a pullback in gold. These are simply overbought situations that need to work their way out. If we get a delay in this fiscal package, you're going to see more of it. Silver is going to be a little more of an expanded pullback right now because it was more overbought and that ascent went parabolic instead of gold, which actually had some trend to it. I am eyeing the miners right now. You know the two miners I like, EGO, Eldorado Gold, which is trying to pull back down towards that 11.50. I'd love to be able to grab this stock at $11. Barrick Gold, on the other hand, if you go a little bit larger in that spectrum of those miners, seeing still the same pullback, 27 is the level. I like that one. And then when you look at the silver side, I like Wheaton. WPM, if we could get a 50 print on it, which is where we were just a couple of weeks ago, I would love to get long on Wheaton, because silver is going to continue, and you're going to see a jump when we get this fiscal plan out there, because it is also going to affect this, which is the dollar. We see the UDN, which is one of our fast profit trades from a month or so ago, continue to move higher. I like this combination of the UDN, silver, and gold. Feel like Cornelius singing Silver and Gold. Boy, that's a throwback for anybody. Somebody tell me that you know what that is at least. I got to have a little levity here. So for the night trader, I tried the VIX and did not come up with, I'll try VXX in Schwab. You know what? If you're using Schwab, this is a side question, probably should be waiting for 11 o'clock for a question like this. If you're using Schwab's Street Smart Edge platform, all you have to do is type in VIX and it will pull it up for you. I believe that is true. I'm trying to double check for you. It might actually be a $ VIX, and it is. So you want to do $string VIX. If you're pulling it up on a Schwab platform, that is your symbol for your VIX. Burl Lives, there you go. Bumbles bounce. See, we get a little bit of a response from everybody. I love that you're playing along with me. Thanks so much. You know what? If you look at the staples out there, there are a bunch of them out there. You've obviously got Procter & Gamble, which we talked about yesterday. I like Procter & Gamble making a strong run until the end of the year. You look at that other one, and you know what? It is a company that is near and dear to my heart. If you look at Kraft Heinz here, it has been sorry, I was looking at the other screen. I typed in I was going for the old Heinz. Kraft Heinz has been a little bit slower on the XLP, the staple side. It's not to say that there aren't better companies. Obviously, there was a failure to launch. When you look at like a Hormel was one of those companies that everybody kind of was shocked by, especially in the beginning of the pandemic, but they make canned food, guys. You know, the other one is Campbell Soup, CPB. You look at all of these in the same light, that's a zombie flatline curve. So if I look at Kraft Heinz and I look at right now, Procter & Gamble, I think on the food side and then on the beauty and washing our hair and staying clean side, those are the two companies that stand out. You could look at a Colgate-Palmolive in this, but Kraft Heinz has got the trade coming on. The company's got itself straightened back out again. Colgate-Palmolive obviously is going to give Procter & Gamble a run. I like them all right now, and you can grab them all with the XLP, the Consumer Staples ETF. This is going to be more of a defensive play. I think it's a good foundation for anybody's portfolio. I own, obviously I'm going to say it, I own the XLP, just so that you've got, you know, that you've got full disclosure. It is part of one of my part of one of my foundational holdings, if you will. Any other questions? You can use the VXX. I actually have luck with the VIX that gives up the Wednesdays on Schwab's platform there. It is 9:27 pre-market. I think you watched. Let's talk about what you watched this afternoon right before I let you go. I hate to say it, but watch the rhetoric on Capitol Hill. Everybody, I saw Steny Hoyer. Oh, and there was I got an answer to the question. We were talking about whether or not the president can delay the election. I think that was during our 11 o'clock. Oh, man, there was a great write-up on Bloomberg about this and how the flow of what happens. The president cannot actually delay it. This is crazy. Put it this way, we could end up with a senator as the president on January 20th if we didn't have election results by then. And it's an interesting twist. You can look it up. It's a Democrat. So interesting, this question. Continue. I'm sorry, I got off in the weeds there for a second. Continue to watch what's happening with the stimulus program right now, especially that $600. That is a big thing, especially when you got consumer spending that just came out that was a little bit better than expected. But income was low. People are going to look at that and say, if we don't get something done, you're going to see a real problem with the economy and spending looking forward. That's going to be your headline that you watch. China's been quiet for the last couple of days here. Expect to see something flare up over the weekend for some reason. I got a little bit of a feeling on that one. Obviously, the political rhetoric is more of a headline than the earnings right now. Earnings have been doing well. Technology outweighing everybody. Stay long on the NASDAQ 100 and some of these large cap tech. Take a look at Johnson Control, Pinterest. I love Pinterest taking out that 40 and moving higher. And watch out for Gilead right now. I think that's the one that's going to be lagging and continue to lag. AstraZeneca and Moderna continue to be your longer term plays on the vaccine. And from there, I'm going to pass it off until Monday. I'm going to wish you the best trading success. I'll look forward to seeing my night trader people at 11 o'clock. And guys, have a great weekend. Get out and enjoy yourself a little bit. It's going to be raining here all weekend, but I'm still going to go sit on the deck and maybe have an adult beverage and enjoy my dogs. Have some fun. Enjoy yourself. That's what it's all about. Making the trading money is just what makes it a little more fun. All right. I'll see you Monday morning. Have a great weekend, folks.